All right, good peoples, good early morning. Let's jump in here. Um, I updated Curve. They had already done this 2 or 3 days ago, but with the holiday season, it's kind of silly season with everything that's going on. Um, but nonetheless, I wanted to get annualized with the 12 payments in the month of 2024. So I reanalyze my 12-month data. So first I'm going to give you the curve data, what their December payment. You may have already seen that now, but this is more about the analysis. Then I updated my compare to YieldMax because on these 6 funds, excluding the tech titans that Curve has, their Tesla, their Netflix, their Apple, their Google, their Amazon, and their Microsoft. That's a direct comparison to YieldMax. So I wanted to update the annual comparison because they both had declarations in December. So now we got all the data in. All right, let's go through just the curve stuff and let's just move to the last payment, right? You care about December. And they had some nice payments. I suspect return of capital more so. But some pretty nice, look at Apple here, their Apple, right? Known by them as AAPY versus APLY for YieldMax. So, and Tesla, their TSLP, had $1.30, had $1.05 for Netflix, $1.75, 50 for Google, they call it Goop, 75 for Amazon, and 40. So the lowest pair was the 40 on their MSFY or Microsoft. But nice yields. And then what I did was I went in and annualized the total return. So I even went back in on the stock and said, okay, normally I just take declaration date. In some cases I use that, but I said, all right, let's do 1 year analysis in addition for just the NAV price. Let's use 12/28, 2023 for when I compare Curve and YieldMax, and then use the closing price on 12/27 because we have that one. We're soon to have 12/30, right? And then I think New Year's Eve on 31 on Tuesday will be a partial day, kind of like what the 24th typically is. But nonetheless, I'm using the close on 12/27 for that data. Now, as you know, when you look at YieldMax, they do groups, but everybody has got the same time period here over the 12 months and looking at all the distributions paid by both sides and then the price back on 12/28 and then the close price on 12/27 on all the funds. So if you care or didn't look, Curve declared on 12/23 their ex-dividend was 12/24, the day before Christmas, and they paid the day after Christmas. All right. And then we had a 12/27 trading day, and now we will have 12/30 and a short day on 12/31. All right, so given a chance, happy New Year to everybody. Be safe, have fun, whatever you're doing for the New Year's. All right, so nice payouts. So the thing that I think is really interesting, so the only fund, if you look at their distribution yield and then their NAV gain or loss over all of that, there's only one fund that they had a NAV loss in. So they had a 3.41% NAV loss, but they had a 9.94. So not particularly great then. That's a 6.5-ish, little more in total return. But otherwise, they got a 62% on Tesla in total return, 55%, right? And I almost could rank them in order. So you got it. And then this Titans, guys, this has only been like 4 months of a payer, and it's targeting around that 7, 10, 12. I'm sure they'd hope it'd be at 20, but I don't think it's going to be that. But they've had significant appreciation. But again, that doesn't compare to the 12 months of everything else, because it's like comparing apples and oranges, right? The inception was 723. So not fair to do that. But this Tech Titans is a bunch of tech big companies. You can go to the Kurv website and look it up. Okay, so let's take a look at this history comparison. Now, let me tell you what I did and what I didn't do here. So I had done a 3 months, 6 months, and 12 months. So when I did the 12 months, I had to go December payment of last year through November payment of this year. So I switched up only this one. I didn't go back and redo the December for the 12 months and the 3 months having October, November. I'll eventually get there. But what I did was I updated all the closing prices. I added this little summary of their total payouts. Okay, which I just showed their total payout for the individual one and not necessarily all of them, and then compared them. So in some fairness, let's go through and you can see the nice distribution with the capital gains. For this is the first month. Normally, I always hand it to, look, YieldMax has said through Jay some interviews, hey, we're returning capital. Yeah, you're doing that through high distributions, but you get that ugly word. You get a lot of NAV reduction, NAV loss. Okay. And when you can't make that up in total return, because total return isn't cheating, it's saying, okay, how much yield did I get? I'm giving you credit for that. And then how much gain or loss did I get in the underlying? Assumed I held it over the last year. Okay, so stats don't lie. They just expose the data. You can ignore whatever you want to ignore. Okay, and I've always handed it to people where I've said, if you receive, if one fund paid 10 to 1 every month, let's say that a fund equal price and somebody paid $1 a month and another fund paid you 10 cents, and you looked at it and you said, hey, this one went up 30%, but it only paid 10% every month. This thing paid 100% every month. Yeah, it went down 20%. So you can still do the math and see that the high payer won. But when the higher payer doesn't win, that's what is you have to analyze and look at, right? Year in and year out, for that matter. So you can see here with these higher payments for them, they had 575 versus 447. Well, that's the only instance. Look at the other ones, guys. In all fairness, you get more money in the YieldMax funds, 325, 378, 240, 376, 246, 320. You guys can see that. Sometimes it's big. This one's almost double, right? 212 to 380. Oh, this one is, right? Look at this. Back in May, 206, 421, 195, 361. Okay. So how did we do at the end of 12 months? Well, I think this might surprise you a little bit. So here's your 12 months compare. Again, you can look these up, verify what I'm talking about. You have a 1227 close price. You have for all the funds, right? So you can see here on their Tesla, right? Their Tesla for YieldMax and TESPLI, right? TSLP for Kurv. This guy went from 28.7 to 31.33. This went from 24.24 to 15. Right? Again, look here statistically. So when I summarize this, you had a almost 30% better return with the Kurv fund managing Tesla. So, everybody, well, yeah, but Jay, they're changing to, Spreads, well, guys, you've had enough time now. I haven't seen a noticeable improvement on that. As a matter of fact, with the one exception, okay, you have a 27.56 advantage here. This total return, not this. If you looked at NAV, you had a 9.16. This is where you got killed, right? 37. Here, you didn't quite double the payment, but you were distributing more money, okay? But when you add those together, you get killed there. And so the argument can be nobody likes to lose money. Uh, and that's your net money. So let's look at Netflix. Pretty even. This one was very even, right? You did pay, you did double the distribution. And you actually, it's the only fund in YieldMax that sustained itself 1831 to 1845 across that. So YieldMax should be proud of that one. That's a good 50.21 annualized total return. But you were still ousted, you were still beaten so ever slightly, right? So I wouldn't blame anybody for owning YieldMax. I'm getting more money along the way, okay? But I also, after that year, I don't have capital gains if I did want to sell it, buy it back after 30 days. So I don't get the wash sale rule going against me. All right, Apple. So what I did before I started putting a check mark who won, now I just put black and green here by who won and by how much next to the winner, right? So Kurv's on top. Sorry, Kurv is listed on top every time. The only one they didn't win in summary was Microsoft. MSFO had a 1.88 total return versus MSFY from Kurv. Okay. And 1.88 isn't great. I'll hand you that this is, that's why I said you could just as well own YieldMax and do better because you're getting more money along the way. Everything else, when you have a 27% return, and on Goop to GUI, you have a 17% advantage, and then you had a 4, almost 5, and another 5. And then when finally YieldMax won a category, they won it with 1.88. So, and look, where were they hurt again? They double paid. They more than paid twice as much in the dividend. But oh, look at this. It actually, there's a loser. I need to change that in fairness to. I'm not used to seeing any on the Kurv side, right? So they had a minus 2.57 decline in their Microsoft, right? YieldMax had a 16, but it paid 28, so it ended up winning that category. All right, so I said in summary, as you can imagine, that Kurv for the win, right? Total return all. Okay, there's a couple different ways you can do it. You just simply end up, I added up all the positives. So they had a 54.53, okay, which is from here to here, and these guys had a 1.88. Obviously, if you then do the math on that, you're going to see what the total winning. That's probably not going to be big enough in that column to showcase it. Yeah. So you had a 52.66 higher percent total return if you were in the YieldMax funds. Now, obviously, if somebody was smart enough to go in there and say, well, I owned MSFO, and, if you want more money, I also owned which is the other one? Yeah, this one up here. I also own Nepli versus NFLP, and otherwise I bought Kurv. So don't be afraid to look at these things here, peoples. All right, that's what I got for you. Have a great new year. Again, this is Bruce with Targeted Wealth Creation. This is not financial advice. This is for fun and entertainment. See you, people. Bye for now.